Ever wondered what's the latest development in NIO's stock situation? Well, buckle up for some intriguing news. Recently, Abu Dhabi's CYVN Holdings made a significant move in the electric vehicle market. They invested a whopping $2.2 billion in the Chinese EV maker NIO. This investment was used to acquire a hefty 294 million newly issued NIO shares. Now, here's an interesting fact. The valuation of these stocks stands at $7.50 per share. Quite a deal, don't you think? This isn't CYVN's first rodeo with NIO, though. They previously invested $1.1 billion, showing their confidence in the company's potential. With this recent investment, CYVN's total stake in NIO has increased dramatically. This investment increases CYVN's total stake in NIO to a significant 20%. Now that's what we call a power move. But what does CYVN's increased stake mean for NIO? Good question. Let's break it down together. First, let's talk about the immediate financial implications. Abu Dhabi's CYVN Holdings' recent investment of $2.2 billion in NIO is a significant capital boost. This influx of cash helps to eliminate near-term concerns about capital runway. In other words, NIO now has more financial runway to navigate any unexpected turbulence or to fuel their ambitious growth plans. So in the short term, this is a positive move that strengthens NIO's financial position. But there's more to this deal than just the cash injection. CYVN's investment also comes with the power to nominate 2 directors to NIO's board. This means that CYVN will have a more substantial say in the strategic direction of NIO. The impact of this can be twofold. On one hand, it could bring fresh perspectives and new ideas to the table, potentially steering NIO towards untapped opportunities. On the other hand, it could also lead to shifts in strategy that may not align with the current direction of the company. Now let's touch upon the potential downsides. The deal, while financially beneficial, also highlights NIO's position of weakness. The fact that NIO needed such a substantial investment may raise questions about the company's financial health and its ability to generate enough revenue on its own. Additionally, the deal could be indicative of potentially sluggish sales in the upcoming first quarter. This could be a cause for concern for both the company and its investors. So, there you have it. The implications of CYVN's increased stake in NIO are multifaceted. It does provide a much-needed capital injection and the potential for strategic influence through board nominations. However, it also underscores some potential areas of concern, such as the company's financial strength and future sales performance. Indeed, this deal presents both opportunities and challenges for NIO. So, what are the experts saying about NIO's stock? Well, it seems the analysts are optimistic, maintaining a buy rating on the stock. This bullish stance is backed by an average price target of $11.02, a significant leap from the current valuation. But why are they so confident in NIO's potential? Several factors contribute to this belief. Firstly, the recent investment by Abu Dhabi's CYVN Holdings is seen as a major positive. Not only does it provide a much-needed cash infusion, but it also eliminates near-term concerns about capital runway. This, in turn, increases the financial stability of the company and instills confidence in potential investors. Secondly, the deal allows CYVN to nominate 2 directors to the board, bringing fresh perspectives and strategic insights to the table. This could be the catalyst for innovative solutions and strategic decisions that could potentially steer NIO towards a more prosperous future. However, it's not all rosy. The analysts also acknowledge the challenges NIO is facing. The company's position of weakness and potential sluggish sales in the first quarter are indeed points of concern. But despite these hurdles, they believe in NIO's resilience and ability to bounce back. The potential returns if the price target of $11.02 is met are also worth noting. Investors who buy in at the current price stand to make significant gains, which adds to the allure of NIO's stock. In essence, the analysts view NIO as a solid investment with promising returns. They believe that the company's current challenges are temporary, and that NIO is well-positioned to navigate its way through the storm. Clearly, despite the challenges, analysts see a bright future for NIO. So, what have we learned about NIO's stock situation? Well, we've delved into the significant investment by Abu Dhabi's CYVN Holdings. They've poured over $2 billion into Chinese EV maker NIO, acquiring nearly 300 million newly issued shares. This strategic move has escalated CYVN's stake in NIO to a substantial 20%, following their previous investment of over $1 billion. We've also examined the implications of this move. While it certainly provides NEO with a much-needed cash injection and alleviates near-term concerns about capital runway, it also underscores the company's position of vulnerability and anticipates potentially slow sales in the forthcoming quarter. Lastly, we've discussed the analyst's perspective. Despite the challenges NEO is currently confronting, analysts maintain a buy rating on the stock, with an average price target that significantly exceeds the current valuation. While NEO faces challenges, the recent investment and analysts' positive rating indicate potential growth. Stay tuned for more updates on the evolving NEO's stock situation.